Hello. Okay. Wait. Yeah. Wait. That should work. Was it right there? Okay. Yeah. 0238. This wasn't it. When was this? Friday? This is 26. No, this is a review. It's got to be this then. Yeah. 238. 238. We're going to start here. Okay, for context, 8925, 8825, 8725, and 8650 all have bids on them. This is an active plunge higher, not because these bids are aggressors, but because other people are looking at these bids and deciding that they are aggressive orders. They're trading off of them and stacking in front of them, and that's what makes them aggressive. So that's going to run price up to 94.25. Value shifts higher there, 92.50 a big order trades, and the node thickens up, and then prices go higher after the node thickens up, which tells me value is shifting. 58. Okay. Did it already happen? Oh, that's horrible. Okay, so there's absorption on the inside prints at 93.25. 37's absorbed at 93.75 on the bid. And then that's Q driven. They sell lower. The move's already over. See the 58? They started at 92.25. Let me see if I can catch that. See the 36 that traded at 90.50 on the bid, and then the three piece 91.50 and 92 even, 15.46 and 11 on the bid. These are aggressive buyers, presumably getting in for a breakout. 30 there, 25, 45, 17, 14, 28. These are all buyers getting in. There's liquidity at 54 on the ask. How the Q reacts to these orders is going to be important. If it pulls and the 25 and the 38 at 94.50 and 25 lightens up after 64 on the ask at 94 is hit, that's bullish. You also want to see tape drying up, which is what it's doing right now 93.50, 93.75. 44 trades. That should have thrown price up aggressively typically, but instead it's absorbed. 58 trades then, and nothing happens. The Q replenishes after we fill the large order. And so if price moves against the 44 and 58, that's 100 lots of size caught offside. Or just less people in the market. You'll understand what I mean in a second here. Then 56 trades 93.50 on the ask. So the entire move up, we haven't seen any participation on the inside prints from sellers, and now we have from 92.25 to 94 even. We're also in the part of the profile where directional participants are active. Down at 90, they're not really active. It's just people facilitating trade. 99, 37, 50. You see buyers get in, then sellers get in, and now the queue is moving lower, down by 2 ticks. Irrespective of buyers and sellers, it's moving lower by itself as the market prices in lower prices, regardless of participants or looks for liquidity. Now 15 trades 93.25 and a 92.75, 18 trades on the ask, and price has jumped five to 6 ticks. You know that 100 bid there at 93.75 and 94 did nothing. And then this is how you gauge strength and weakness relative to prints: 10, 15, 25, however many that is, 30, 42, 43. So that means that they're weighing sell side orders stronger, the market makers, and the Q plunges 5, 6 ticks again off of these three orders there. That's bad. It means buyers are weak on the Q side, and they believe they're about to get run over, is what I'm assuming, and that's why they're pulling their orders like that and and sort of extending the price range. Because if they provide liquidity to those people and price does move lower, they get caught offside and lose money. So the better decision is just to pull the order. 20. Now value's shifting lower. Notice how the profile thickens up at 92.50. Now there's an auction between 21 and 12. 12 and 13 are absorbed. Keep in mind we have that 100 lot that traded at 93.75 and 94. So the market's either 100 lots lighter or that person's going to have to puke. And all the people who got up on that buy queue, I told you at the start of the video, there was like an 86, another 86, another 86, another 86, and all these people front ran this order and pushed the market up higher. Where is it now? Back at VPOC, they all disappeared. So somebody pushed up price aggressively and is now gone. And here's where it starts: 221s, 91.75, and 92. Somebody's getting out. 30's absorbed at 92.25 now. Somebody wants higher prices. Then liquidity dries up buy side after moving lower. You already know what's going to happen. It's going to puke. All these people who got in are going to throw up. And notice the composition of the flow. First of all, the Q pulls. So part of the reason the market jumps like that is because the Q pulls. Buyers are unwilling to provide liquidity up from 90.50 to 93. And then right below VPOC, there are two things to take into account. 186 trades on the ask, meaning liquidity sell side is strong and it's real, for now at least. There's no 86 here. These contracts could have been a one lot liquidation order, but because the queue is moving so fast and buyers don't want to provide liquidity to sellers, it spreads out over 5 ticks. So the people who are getting liquidated, the market is making sure they get the worst prices possible on their exit, which is funny. And then a 46 trades there. What I meant to say is notice how right below VPOC, these breakout traders are liquidated, and there's a 5 tick box of people who presumably had their stop below VPOC because some channel or some book told them to, and you can see them all getting liquidated right there. And then, like I said, all the people who got in and chased the trade up here, that's just all pressure building. And if there isn't a breakout, and if that Q wasn't there, if that Q showed up and it was still there and it was pushing price higher, we probably would have went higher. But everybody who got long because of that, because of the what they perceived to be real buy pressure, now that it's gone, they're all just throwing up. There's one liquidated, and then liquidity dries up there. That's the entire move. There's no point in guessing, like, that's why it was funny, because all these people blew out. That's why there's no point in guessing, like, I wonder where it's going from now. Maybe they stop at 87.75 and rally lower. I have to watch the inside prints. If these are just poor trading opportunities, I would only, if I had the opportunity to do this, I would only take one trade and put as much size on it as possible, and that would have been the one trade, is watching this for 2 minutes and 42 seconds doing nothing, recognizing that the queue got stacked like this, and then the move ended and started to reverse, and all these people had to throw up. That's the entire 94 to 85 is the entire distribution. It's one trade for the day. And if I was like, well, I can make more money if I guess correctly, if 87.75 holds, I can add a little of this. I can add a little on top of my I can add a little bit to my equity curve. There's no point. It's better just to take the one. And then what presumably happens here at 86 is somebody spoofs a bid. It might be real. I think it's real. I think somebody's looking for a fill to get short and participate in this. So you want to see market orders hit and be absorbed. One, absorption, meaning they're going to throw up lower, and two, somebody with a large account is looking to absorb buyers because they want to place a directional bet to the downside. That's what happens in a second, right? Somebody puts an 87 there, and it does the opposite. It's probably going to rally back up there in a second, but it didn't. There's one, 82. 40 is absorbed, 76 is absorbed, they're filling liquidity. Then 77 trades is probably going to move lower here in a second. And that person who just, they either got out of the trade using that order, or they're trading into the lower spot of the profile, just filled like 100 lots, which I think is $1,200.50, is $1,250 a tick, and is now probably going to ride it lower. Um, but we're at the low side of the profile, so I think he's just getting out. I think it was somebody who had 100 lots on who got out, because it doesn't make sense to, unless you know something that somebody else doesn't, that you're trading the breakout there. And so he got out, and price is probably going to revert now.